Okay, second video for this weekend, for the week starting 1st of October 2018. So, gold. Just to remind you, we've got this 13-year trend line, which you can only see on the monthly chart, which we have broken below and held below this month. As you can see, the trend line comes in at around 12.13, 12, anyway, 12.11, 12.13, and the high for this month, I believe, is 12.12. 12.12. So, clearly, pressure to the downside. We'll have a look at the weekly chart just to focus in a little bit. There you see on the weekly chart, every time we've hit that trend line, as we hold below it, we've come away sharply from it on a weekly basis at least. So as you know, we were selling sort of around the 12.08 level with stops above 13.14, and that trade worked over and over again. I hope you managed to do that one. Looking at the daily chart, shows a little bit of consolidation during that sideways period that you see on the weekly chart. There we are, a bit clearer there. Shows how we were selling around that 12.08 Fibonacci level, and it worked several times. Last week we broke below this gently upward sloping trend line, which had been holding the lows quite nicely on several occasions. Anyway, we've broken below it. Surprisingly, we had a real strong rally up on Friday to retest that trend line. So in theory, this has held around 1191, 1192, and should in theory therefore start to head lower on Monday, especially when you look at the weekly and the monthly chart with that important trend line. If we are to break up through, say, 1195, then we could get to 1202. Maybe we'll retest the 1208, 1210 area, but as I say, I'd be surprised. I really do think pressure is to the downside in gold. WTI crude is getting interesting. So, we tried a rally up in 2015. We couldn't get up through the 2010 low. When we finally got up through there, and you can see how we struggled around that area at the beginning of 2018, we're through it now. And we moved up to the next target, which was the 2011 low. Now that was at 74.95. We've got a peak at 75.27, so not a million miles above that low. Certainly didn't make it quite as far as this low down here at 77.28. So you can see how that's a decent resistance area. I know that's a 200 point or a 200 tick area, but on the monthly chart, it's not a huge amount, is it? The 100-month moving average also held this rally. So there's a lot going on around $75, $76. Now, we pulled back and managed a good rally up from this low down here, 64.24. Where did we get to? Next move down was 64.43. So that level also worked really nicely, and we pushed up above there this month using the 200-month moving average as a platform to push up. So good chance we'll test what is a trend line. I'll show the weekly chart so we can see that more clearly. But you can see how the $74, $75, $76 area is going to be strong resistance in a very overbought market on the monthly chart. Will we get a double top? We're actually testing the 500 week moving average just a little bit below $74. So even from $74 to $75 looks like a lot of resistance. Who knows? We might just reverse at $74. We're not that overbought on the weekly chart, but we know what's been going on here. So you can see what I'm saying. We're running into resistance. There is this trend line here as well, which comes in at just around 75 bucks. So if we get through 74, will we get a double top around 75 at the trend line, at the longer term moving average that you just saw in the monthly chart, and that those previous lows from 2010? It all looks like it is worth trying a short position there, doesn't it? But you're going to need, well, ideally, if you're selling it around 75, you're going to really need a stop above 76. So it's a wide stop, but of course, if it works, you're talking about, you know, 10 bucks easily on the downside just to start with. Daily chart, if you're just following the daily chart, doesn't show anything. It shows quite a positive outlook, really, from the breakout from this channel. So yeah, you've really got to get your information from the longer term charts. Otherwise, you'd be happily buying this, looking for some serious upside. As you can see, we're overbought on the daily chart. I only look at silver once a day because I don't really trade it. I prefer to trade gold, but wow, I'm just seeing this for the first time. Huge blue candle there on Friday, which I must admit would have caught me out because I wouldn't have expected us to be back within this channel. and we rocketed straight up to the 14.70 resistance, 23.6% fib resistance, which coincides with the 55-day moving average. That was our selling opportunity. I've had that level on the reports for weeks, I think. And look at that, we hit 1472 and came back to 1460. So if you manage to get on that short trade, that looks all right. I don't see any reason why we shouldn't hold the shorts. I don't think this is the start of anything bullish. I don't see anything on the longer term charts that tell me that we have a particularly interesting buy signal. We are over short on a weekly chart, fair enough. But I'm going to stick with the bear trend. I don't see any reason to suspect that's going to change right now. No. But obviously, if we do get through 1475, 1480, that would be bullish in the short term, and we could see another leg up. So just watch that. The risk reward is definitely worth it. If you're short in that 70 area with, say, a 5-10 point stop, you're going to be looking all right. The S&P is actually becoming a better market to trade these days. I'm going to start focusing on it a bit more. I used to absolutely love the S&P. It was just a really good technical market. And then I lost interest. I'll show you why I lost interest. When we were just doing all this kind of stuff, when it was just going up, 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 barely had a retrace. It wasn't a day trader's market. There really wasn't much to do. Long periods of going sideways, and then we'd move up without much of a retracement. And I just found it difficult. Great if you're an investor, because you just sat on your investments and watched them work. But I must admit, this year has, well, certainly the last couple of months has been better. A bit of back and forth movement, an opportunity to buy into some support levels on the dips. I need to refocus on this a little bit, actually. It has been quite... So, this little 23.6% fib was the one, 1208, 1207, 3 days in a row. That's just been perfect. If you were buying at that level, I had it as a buy level on my report, then, you know, you've been able to scalp a good 10 or 15 pips out of that market each day, maybe a little bit more. I'm going to stick with that level. Obviously, we're in a bull trend. Obviously, things look pretty good for the bulls, so buying into dips is the way to go. There's a little trend line there just to reinforce the fact that that's a strong level. So I wouldn't be at all surprised to see us retest the high. If it fails there, we've got a small double top, and then a break below the 1208 level would bring us down to 1285, which would be our next buying opportunity. By the time we get there, we'll have the 55-day moving average and this trend line meeting. But those are the big levels to watch. 1208, 1207, 1285, 1284, and the high, all-time high at 2944. Bitcoin, I know a few of you guys do like to trade Bitcoin, and I think my levels have been pretty good. I know that we've certainly done well through the year selling into rallies. It's been a very good technical market. I don't know why it's so good, but it does work. So we've now got resistance in the 6750, 6800 area. That's been working really nicely, as you know. If you've been selling that one and buying it on the dip down, you've done well. Again, we've now got 6750, 6800 with this 100-day moving average and the trend line. If we get up through 6900, that's going to be bullish in the short term, because that does show a breakout. Maybe we can get up to 7100, 7200 for our next selling opportunity with a stop above the 200-day moving average. That would look like a really nice trade. And that also coincides with the September high up there at 7400-ish. So you can see there's a lot going on around 71, 7300 if we break higher, but seeing as we're in a bull trend, to me, it looks like the risks are to the downside, and actually I can see we've already pulled away from that level now, trading at 65. 63, yeah, eventually maybe we'll even get down to 6,000 and that 5780 area and break it. I don't see any reason at the moment to think that Bitcoin's about to tear up to $25,000 like some of the ridiculous things I read on Twitter. Famous last words. It'll probably go there next week. No, my luck. Right, I'm just going to show you the Dow Jones because I've shown you the EM and the S&P, and this has also been quite a good market this year to trade. As you can see, it's holding trendline support there. If we hold above this trend line here, 26,500, 480, then we'll go higher. Obviously, we're in a bull trend. Obviously, you're buying into dips. It looks fine. Backs up our theory of buying into support in the S&P. I prefer the S&P for some reason. I have spent a lot of time this weekend looking at non-dollar pairs, but I just can't see anything particularly exciting. There's an awful lot of sideways movement. The only thing I can put my finger on something is the euro versus the Aussie. We've had a decent recovery in recent months. This is the monthly chart. We've come back up to retest the 2015, 2016 highs, as you can see. What was the 2015 high? 163.23. Where did we get to? 163.53. Okay, so we have retested the 2015-2016 highs, which also just happens to be around the 50% fib. You can see we've got some longer term trend lines on this chart as well, just going all the way back to 2000 in fact. So this is a really decent trend line. Notice how, okay, we haven't managed a monthly close above that trend line. So that trend line looks pretty important. And of course we've got trend lines from the 2015-2016 highs. So there's resistance there. I'm going to move into the weekly chart, give us a little slightly closer view. So we've rejected these highs, these fib levels, these trend lines with some nice red candles indicating that the market is turning from an overbought situation on the daily chart. This does look quite negative. We could well, according to the weekly chart anyway, we can certainly get down around the 5700 area. We've obviously got some support around the 159 area from these peaks. But let's go on the daily chart because we probably won't be running anything for 300 pips right now. So the daily chart, yeah, that does look kind of negative. We certainly have a lower peak on the daily chart from September, and we're starting to break below this low, which was at 160.48, which is starting to break below there on Friday. So this is looking quite negative in the short term for the euro versus the Aussie. No reason why we can't get down to at least 159.40, 159.30. So there's there's 100 pips in that if you're managing to sell around the 160.90, 161 area if we get there on Monday. Who knows? Maybe we could get down to the 100 and 200 day moving averages down here and the 147.80, 147.90, 147.50 area. There is obviously some support up here at 159.00, as I said. The 4-hour chart actually is probably worth a look. This shows us maybe building into a downward sloping channel. We've got some support from the 200 period moving average here now, so maybe we can bounce up to 160.150. Actually, I was saying 161.00, but maybe 161.50, 161.70. That would be a really nice sell area, wouldn't it? By then, the 100 period moving average will be lower and probably acting as resistance as well. Anyway, a very loose analysis of this idea, but it does look like we could be turning lower. And if we do start to hold below 160.50, that's obviously going to be pretty negative anyway. So just trying to find other opportunities because it's a pretty dull market at the moment. I'm finding it frustrating.